Hey guys, welcome back to Father and Son Investing. We're going to circle back on a company that I covered way back in the summertime. It's called Ontrak. I went back and watched that video again today. I applaud all of you who managed to sit through that. It was pretty boring and I was speaking pretty slowly. Hopefully my technique has gotten a bunch better since then. Now the Ontrak price has been plummeting. So some of you out there may be thinking, hey, is this a buy? We're going to talk about that. Stay tuned. All right, just to quickly sort of recap what Ontrak actually does. Ontrak specializes in mental health, and they contract with insurance companies so that members of those insurance companies' patients who might have multiple comorbid conditions, so maybe a patient has diabetes plus hypertension plus heart disease plus they're obese, they oftentimes will also have significant mental health issues that play into those diseases, that if those mental health issues are improved, their disease improves. So Ontrak does that. They do that using AI. They have access to a lot of information. They use their computer systems to compile all that information and identify people who might have significant mental health issues driving or worsening their physical health issues. That is essentially a synopsis of the company. If you want more information, you can go back and watch that sort of boring, dry video that I did. So let's just quickly take a peek at the Ontrak stock price. You'll notice that it's been going up and down. Actually, if I go back to 1 year instead of 6 months, there was a nice steady incline in the stock price going on. It dipped a bunch in the fall, and then it was making a really great comeback early this year. It got up to about $98 a share. I was really excited about that. And then suddenly it's been dropping, and then in the last day or two, just plummeting. We're all the way down to $28.86 a share right now. Is it a buy? Hopefully by the end you'll understand why I think it's a buy. Now Ontrak was kind enough to release a statement ahead of their conference call next week where they were supposed to announce their fourth quarter results. They went ahead and released this a week early. They did a very good job of explaining what happened. I've watched one of their conference calls or an interview that was done on the Cowen Health Conference yesterday that involved their COO and their CFO as well that explained some of this. Now, in their letter, they describe loss of a customer. It's actually their largest customer. In the letter, they described them as Ontrak A customer. However, in the Cowen Health Conference, they identified them as Aetna. Aetna, of course, is a large health insurance plan within the United States. The Cowen Healthcare Conference interview discussed a lot of the dealings, the negotiations going on back and forth with Aetna. Initially in the summertime, they had some problems getting information going from Aetna to Ontrak to update the data systems. That sounded like it got worked out probably in December or so. And then Aetna was saying, hey, you need to sign a new contract before we're going to be sending you, the data that they want. To me, it sounded like there were some other issues going on in the background that weren't necessarily being discussed. One of the things brought up was that Aetna was comparing their service or the metrics on their service was being performed differently than other health insurance companies who contract with Ontrak. So Aetna was looking at this in a per provider visit, how much money are they saving, versus the total overall cost is what I gathered out of this. In fact, the COO mentioned that the ROI, the return on investment, for Aetna was 3-to-1, which is one of the best returns on investment that Ontrak is doing for the companies that they service. So that being said, the letter announced that their projected revenue for 2021 was going to significantly decrease. Initially, they were projecting $165 million, and they have since revised that down to $100 million. Now, of that $100 million, they're saying that $88 million of it is already under contract. In listening to the Cowen Healthcare Conference interview, they have significant amount of companies in their pipeline and potential revenue in their pipeline that they're actually saying that this $100 million for the year is actually on the conservative side. Also, given that pipeline, they're assuming that they will go back to 100% revenue growth starting in 2022. So instead of being up around $300 million in 2022, we're looking at about $200 million. Now, occasionally companies are going to have some hiccups like this. But I think that many of the people who have been selling off are maybe overblowing this a little bit, especially given some factors. Now, back in October, Ontrak started doing some Medicare Advantage plans as well. They call that Ontrak CI. One of their significant customers is Cigna. Cigna has been expanding their Medicare Advantage, and in concert with that, then Ontrak is seeing more Medicare Advantage patients that they can be involved with. In the letter that they released, they also talked about their fourth quarter of 2020. The revenue was $29.3 million. That is a 149% increase compared to the same period for 2019, and a 22% increase from Q3. Now, the other nice thing is their adjusted EBITDA for the fourth quarter was a positive $2.2 million, versus in 2019, the same quarter, they lost $4.6 million on the EBITDA. They are still losing money. Their net loss for the fourth quarter in 2020 was a negative. They lost $3.2 million. However, if we compare that to 2019, they lost $8.7 million. Now, I think this company is a buy. The stock price to me right now looks like a bargain. They are going to continue to grow even without Aetna within their circle. Now, there is still a possibility that they could come back around and sign a contract with Aetna that has not been totally thrown out the window. I don't know how likely that is, but they haven't totally given up. I went ahead and bought more shares of Ontrak, the common stock. I also want to talk to you, though, about Ontrak, the preferred stock. Now, the preferred stock goes by the ticker symbol OTRKP. I have here before you what the stock has been like for the last year. Now, this was sold at $25. Now, this was sold initially at $24.75. At least that was the latest go-round in December. They've issued this a couple of times now. Let's just talk about this. It's called a cumulative preferred perpetual stock. What does that mean? We're going to break this down bit by bit. What is a preferred stock? Well, a preferred stock is a share of the company that the dividends are paid out first to those shareholders before the common stock shareholders receive any dividend, if at all. What is a cumulative preferred stock? Well, that refers to the dividend. Now, a cumulative preferred dividend is one that the dividend has to be paid cumulatively. So if it says 9.5% per year, then that shareholder is owed that amount, 9.5% per year. Now, there may be some quarters where the company, for whatever financial reasons, can't afford to pay out the dividend. If you don't have a cumulative preferred stock, just a preferred stock, well, sorry, Charlie, you lost your dividend for that quarter. But a cumulative one means that you get that dividend regardless. So if they can't pay it out to you in Q3, they're going to have to pay double the dividend in Q4. If they can't pay it out in Q4, then we're looking at triple that amount of quarterly dividend in Q4. So you get that dividend regardless. At some point, you're going to get it. All right, what does the perpetual mean? Well, exactly what it says. It's perpetual. Some preferred stocks are for a limited amount of time, typically 30 years. In this case, it goes on in perpetuity as long as the company remains in existence. Now, in this case, the dividend is 9.5% per year. It's paid out quarterly. And what is that based on? It's based on the liquidation price of $25. What does that liquidation price mean? It means that if the company went bankrupt, there are certain ways that assets are recouped back to investors. So obviously, the venture capital people and the bondholders are going to get their money back first. But next in line are the preferred stockholders before the common stock holders. And the redemption price or the liquidation price for this is $25. So the 9.5% is based on $25 forever. Why might this stock then be a buy as well? Well, because currently the stock is going for around $22.50 a share. So that's $2.50 below the liquidation price. If the company goes bankrupt and they still have assets left, you're going to get $25 per share rather than just $22.50 that you paid. The other nice thing about this, if we go to the CNBC website, I like this website because it nicely shows dividend yields and the percent rather quickly. So the other nice thing about this is the dividend is no longer 9.5% because the stock is not going at $25. If you buy these shares, your dividend yield is going to be 10.56%. And that is in perpetuity. You will have invested $22.50, but you're going to be getting 10.56% back on that. So in many ways, a preferred share is like a stock, but also like a bond. I also thought that these preferred shares were a buy, and I went ahead and bought some of them today. I think that Ontrak is positioned well to grow, even though they lost their biggest customer, Aetna. 3-to-1 return on their investment, and Aetna was saying no thanks. Again, I think there may be some other issues there that aren't totally being discussed. But other companies are still on board, and they even had a large national health insurance company contact them recently, reaching out to them to provide service versus them trying to sell the national health insurance company on this one. I think this company is still going to grow. I think the stock price then looks like a great bargain. Granted, this year may be a little bit rough, but this decrease in stock price, I think, is a great chance to buy. So I've bought in. You need to do your own due diligence and see what you think about it. I will plan to do another video probably next week on Ontrak when they have their official fourth quarter earnings result conference call. There may be some more information available out of that as well. Let me just say one more time, get the young people in your life investing. It is a fantastic thing for them to learn. And quite honestly, my son is teaching me some things that I didn't know. Until next time, enjoy your investing.